online second-hand marketplace ThredUp made its public debut on Friday, hoping investors will overlook its lack of profits and instead focus on the growing demand for used goods among a generation of young shoppers. The San Francisco-based company raised $168 million at a $1.3 billion valuation after pricing its shares at $14 apiece on Thursday evening, at the high end of its previous range. Shares popped 30% in the first few minutes of trading on Friday morning. ThredUp is one of a string of companies looking to capitalize on a growing market for second-hand goods, which is projected to more than double to $64 billion by 2024, according to the company's own estimates, which were compiled with global data. Most Gen Z consumers see no stigma in buying second-hand, and 40% have bought used clothing, shoes or accessories, double that of Gen X and Boomers. I think that is when investors start to pay attention, when you have big markets and companies like ours that have a real advantage, said co-founder and CEO James Reinhart in an interview on Friday. ThredUp follows competitors Poshmark and The RealReal in seeking the public markets. Poshmark had a strong debut in January, with shares more than doubling on its first day of trading and giving the company a market capitalization over $7 billion. However, the stock has since shed two-thirds of its value. The RealReal, which focuses on luxury goods, has been public since 2019. Its market capitalization is virtually unchanged since then at $2 billion. Since ThredUp was started in 2009, it has purposefully taken a hands-on approach in an effort to make things as easy as possible for consumers. It seeks out merchandise by offering to mail people clean-out kits, which they can load with unwanted clothing, shoes and accessories and send back to the company free of charge. ThredUp workers are then tasked with the big job of going through the merchandise, deciding what is in good enough shape to resell and listing items online. Nearly 1,600 of the company's 1,862 employees are located across its 4 warehouses. Last year, they sorted through 24.7 million items and decided to list 59% of them on the site. Touching things is hard. Low price points are hard. Single SKUs is just plain crazy, wrote Reinhart in a letter to investors ahead of the offering. Yes. We are doing the hard things that meaningfully expand this opportunity and enhance our leadership position. To keep costs down, it is working to automate more functions, such as photo editing and pricing. In 2019, it moved to a consignment model, meaning that it doesn't pay sellers for inventory until it has successfully been sold and the 2-week return window has passed. Revenue climbed 14% to $186 million last year, which marked a slowdown from the previous year when it logged growth of 26%. The company noted disruptions related to the COVID-19 pandemic, which hampered its ability to quickly process new inventory.